back on November 1st of 2023, the FOMC had their second to last meeting of the year. And the results of that meeting and the ensuing data that followed led to the 10-year yield, which I have here plotted with the TNX.X, that's 10 times the 10-year yield, okay? It fell hard, and I predicted that it would. You can see it wiped out all of these pink lines, which are all my quote-unquote support levels on the 10-year. And here we are, the last one being met today, Friday, November 17th. So it's time for me to update this chart and have a look at where the 10-year might head from here. If you're new here, I'm Hema Reddy. I use price action, momentum, and market timing or forecasting to boost my trading and that of my tribes. So I'm going to take a minute here and do the analysis and be back and show you where I think yields are headed next. All right, so I took a look at the monthly, weekly, and then the daily charts of TNX.X, and I've come up with these 4 resistance and 4 support levels again, using air quotes because when you're talking about yield, really this is just the opposite of price. So where the 10-year is now, 44.30 on the TNX.X, which is 4.43 on the 10-year itself. Up ahead is 43.33, which is a major important level from the monthly chart. Okay, so if you pull up candlesticks that are 1 month each of TNX.X, you will see where that level is in history. Beyond that is an entire range of action that is from September 1st that's very important to what could unfold. And so that range is from 42 to 41.25 to 40.60. Okay, so those are the most important levels beneath the current yield value up ahead. Now, there is something happening right now on this yield chart between the actual yield value and the RSI power zones down below, my favorite momentum indicator. It's very slight and it's very early, but what is happening is that the move down on the 10-year is not going down with as much force as it has earlier. And the the momentum indicator is reflecting that. So what this means is, okay, don't rush to take action yet, but what this means is that perhaps this fall in yields is slowing. And why this is super important, guys, no matter what you trade, is because not only with this seasonal expectation of a strong market, but with the falling yields since end of October and all the way through November so far, that has fueled the rise in stocks. It's not the only reason, okay? There's also been falling oil prices, which have helped companies save money on transportation and the supply chain, right? Which has led to higher stock prices. But the yield factor is a big driver. So while we need to wait upcoming data to see how the Fed might interpret it as to whether they're going to keep hiking rates or pause more or cut rates sometime in 2024, all of that is to be determined. What I want you to pay attention to right now is an additional level here. Okay, so I waited to draw this one on the chart. That additional level is 45.59. Now, if you're looking at this and you're wondering, what are all these levels, Hema? Where did you get them from? I'm putting the details in my tribe portal with this video. So if you're a member of my tribe, okay, you get my emails, then you just go into your free tribe portal chart of the week section and you will see next to this video all these levels listed out. But I'm telling you right now, 45.59, it's an important one to watch. Okay, so here comes my outlook. I don't have a crystal ball, but here's what I'm seeing. If the 10-year continues to stabilize off the current disagreement between price and momentum, then a move above 45.59 on the TNX.X, so ideally a daily candlestick closing above that level, that would be the first indication that the 10-year is looking to stabilize for a while and potentially make its way back to about 4.8 or 47.89 in this chart, all right? But while that 45.59 is intact, there's still room for the 10-year to continue lower and especially into this 43.33 level. So guys, all these markets are really super closely related right now. It's not a direct up-down correlation at all times, but right now, paying attention to what's happening in the 10-year and oil and other markets is really going to help you if you're trading equities, whether that's stocks directly, the SPY ETF, even the S&P futures like me, or anything else related to the broad market. So I'm going to keep a close eye on this, even though next week is a holiday, Thanksgiving week here in the States. There's still Fed speak and data and all that jazz. So we'll keep an eye and I'll keep you posted. If you found value in this video, please give it a like. And if you would like to see more like it, please share what you'd like to see below. Punch that subscribe button and I'll catch you next time.